Now I'm going to close these windows. Now a quick way to close a window, of course you can always pick the X up there, but if you just hit the escape key on your keyboard, it'll close that window, and now we're back to the home screen. Let's do the accounts receivable cycle. So we're going to make an invoice over here. So you can also get to that from the customers menu up top. However, I like the visual screen. So I'll pick on create an invoice. Now, when we make this invoice, it's going to update the accounts receivable. All right. So actually, I'm going to come over here. I'm going to pick on view balances on the left-hand side. I use this window all the time. So there's the checking account. There's the Visa account that we set up. Notice how the accounts receivable right now is 0, okay? Now, all these windows are going to work in a similar way. When there's a pull down, I can either click on the pull down and choose one, or we can add one on the fly right there. So all the pull downs will work that way. You can either click on the pull down and pick a choice, or you can add one on the fly. So there's good old John Smith, right? Okay. Now, if I typed in an address in the customer screen, it would have shown up here. If I type in the address here, it'll update the customer's window. So things will update as you use it more and more. So now you're going to start to see the screens tied together. That came from the customer screen, right? The items are going to come from the items that we put in there. So there's the webinar. So let's say I got a webinar for John. Notice that the $500 came up there. Of course, I can put in a quantity in the description. And so let's say John had 2 webinars. So it's going to do the math for us over here. I just want to make a note about this. Notice how the sales tax is not there yet. Well, you have to turn the sales tax on as well. I'll do that for you in the next step. Notice how the sales tax is not there. You have to turn it on. Okay, now QuickBooks can help you manage your inventory. So let's say John got a webinar and then he also got some keyboards. I'm just making up an example, right? Now remember we had 50 keyboards in stock. In fact, let's take a look at how many keyboards we have. I'll pick on list and then the item list. And you can see there's the keyboards and this number over here is the number in stock 50, right? So we can clearly see that. Well, when we add something to the invoice, it's going to decrease the inventory. So let's say we got 2 keyboards. Now, remember how I put $9 onto the sales price, and there's the $9 right there, and then it's going to do the math for us, of course. The invoice can have as many line items as you want, all right? Now, we can print this, we can save it as a PDF and email it that way, or you can email it directly. Whatever you want to do is fine. Let's go ahead. Now, when I do save and close, the accounts receivable is going to go up by $1,018. I'll pick on save and close. Okay, good. Now, there's that 1,018, that's the accounts receivable. When you just use the screens in the way that I'm showing you, it's going to update the appropriate accounts for you, which is very, very nice. Let's go back into that invoice. If you want to go back into something, you go into that same screen, and then over here, you can either use the arrows to go back and forth, or you can find it in many ways. So I'm just going to go back, and then we see that invoice. So remember, I can print that, I can save it as a PDF, I can email it. So let's assume that that customer, John Smith, has the invoice. I'm going to hit the escape key to close this window. Now, oh, watch what happened to the inventory. If I go back to the item list, remember how it was 50, we sold 2, and now it's 48. So if you do the inventory in the way that I'm showing you in this video, then and make an actual inventory item, QuickBooks will track that for you. All right, it did decrease that by 2, as we can see. So all that's built right in if you do it the proper way. Now, so let's say I sent that invoice out, and at some point they're going to pay that. All right, so just follow the flow over here, and I'm going to receive that payment. This is all part of what we call the accounts receivable cycle. So I'm looking at the check, and the check is from John Smith, right? Now it's going to remember the invoice that we sent out. Now, is it ever the case where you set out the check for, I mean, the invoice was $1,018 and they send you $500? It happens all the time, right? It's called a partial payment. So up here, I can just put in the amount that they paid. Obviously, there's going to be partial payments, and it'll track that for you. And then you can click whether it's check or cash or any of the others. If they paid the whole thing, then I'm just going to click this mark over here, and then it'll tell you it's going to put the whole balance into the amount. Although you can still change the amount over there if you needed to. So when we accept this payment, the accounts receivable is going to go down. But you're going to notice the main checking isn't going to go up yet, because right now it's going to receive that into undeposited funds. I'm going to click on Save and Close. Good. Now, I don't know if that beep is coming over. I think that it is, but it's coming over for me on my side. I like that beep. It just kind of tells me that something's happening. So I'll pick on Edit and then Preferences, and then I'll pick on General, and then there's the house how to turn the beep on or off. I like the beep. It tells me that something's happening, but maybe you don't like that. So it's just another one of those preferences, okay? Now, check this out, everybody. The accounts receivable went down, but the main checking did not go up yet. It's because you have that check in your hand. You have to, actually make that deposit into your bank. So just follow the flow, and I'm going to record the deposits. You see right now, it's in an account that's called undeposited funds. All right. So if there was more than one payment there, of course we can pick on more than one. This is going to take that from undeposited funds and then put it into your, of course, you pick the proper checking account or bank account. All right. So this is going to make the 5,000 go up to $6,018. So that was a major part of the accounts receivable cycle. I made the invoice, I emailed that or printed it out. At some point, I received the payment, and then I record the deposit. Now, if you're just doing point of sale, you wouldn't really send them an invoice. You would create the sales receipt. Let's take a look at that one. Let's say you have point of sale, okay? And somebody just comes in. So now I'm going to add Mary this time. Mary is not going to be on my list. So that's Mary Kelly, of course. Finish Mary Kelly. And then if I want to quick add that, I'll just pick on quick add, and that'll add Mary to the customer list. Otherwise, I'll go through the full setup of Mary, but I'll just do quick add. Now she is in that customer, see? She's in that list now. And I know what Mary needs. Mary needs some keyboards for sure. So then we'll do 4 keyboards for Mary, $36, right? This is going to make this is not going to affect the accounts receivable because when we do a sales receipt, we're going to collect the payment right away. So Mary paid by cash the $36, okay? So I'll pick on Save and Close. Now watch the main checking. The main checking is not going to go up yet because I have the $36 in my hand. Then I have to make the deposit into my bank, right? So imagine you made your deposit slip into the bank. Well, you have to tell QuickBooks that it's going to go into the bank as well. So we're going to record the deposit, and there's the $36 from Mary. Now this is going to update the bank account. See, it's still in undeposited funds. And now watch the main checking go up by $36, as you can see. So if you're going to send out invoices, you can do that over here. You can receive the payment. The create sales receipt is like your point of sale. You're going to make the sale and collect the payment at the same time, but either one of those tracks has to eventually record the deposit. That's what's going to actually update your checking account. That's a quick review of the accounts receivable cycle. All right, so um, receivable. You can either make an invoice. If you're going to do point of sale, you'll go over here. If you're going to make an invoice, sometimes you'll at some point you'll receive the payment, and then you're going to record the deposits. Let's go back to the customers window for a second. The customer center. If I pick on John and Mary will be there. Look, if I pick on John, I see their whole history over here. I see their invoices and their payments. If I pick on Mary, she just did that sales receipt, right? Oh, here's a great part about QuickBooks. Most of the screens will have what we call the drill down feature. So if I actually want to see that invoice or that receipt, I should be able to double click on that and it brings me right to that exact transaction. So a lot of times we have that drill down feature. If you can double click on something, then it brings you to the finer detail. We call it a drill down. I'll just close these windows. Good. So now let's go ahead and do the accounts payable cycle. I'm going to show you two ways to put your bills in. One bill would be like for the electric company. Oh, by the way, the accounts receivable is now 0. John paid his bill. And let's take a look at the item list. Remember how Mary bought 4 keyboards and now the inventory is down to 44. So it is keeping track of that. As long as you set that the way I showed you, it'll track your inventory for you.